Welcome back to Digital Perspectives, everybody. I'm Brad Kimes. You can follow me on Twitter at BackupBradley above at the top of the screen and everything that we're talking about here. So let me go ahead and get into this. We have got quite a bit to discuss this morning. First of all, let's talk about the market moving here, okay? The market has been on a tear. Right now, we're looking at Bitcoin at 10,968. XRP was at 22 cents, now at 21.99. So, it's exciting to see the market actually moving in the right direction for once. Look, anybody who's been here for any length of time knows that the last 3 years have been tough. Oh, it's been tough out here. So, look, I can't help but feel like with the news of the OCC and the obvious acceptance to the banking system that they're making way for digital asset custody, that there's going to be a lot other news to follow this. We know that the OCC is going to release a federal charter in the fall. Now, with that being said, we're about to discuss an OCC document that has come out, and this is courtesy of Big Skinny. Shout out to him. And I'm going to play you and go through some things right now. Like, for instance, what you're looking at right now is the Consumer Financial Protection Bureau document that lists Ripple and XRP in here. That rule has been put into effect. And it's important to understand that they also show here virtual currency companies, Ripple, as XRP is shown here as a virtual currency, XRP. Now, this is important, because we're about to take a look at a new document that we need to understand what some of these implications are here. Now, that's the Consumer Financial Protection Bureau document that went into effect on the 21st of this month, just 7 days ago. So now we know Chris Giancarlo, who has come out, former CFTC chairman, and has said that XRP, in his professional opinion, is also a currency right here. Considered a currency or medium of exchange, as he wrote from Conrad Bauke and the international law firm Wilkie Farr Gallagher, which is also counsel to Ripple. Okay, now let's keep this moving. So this is a 2016 document exploring special purpose national bank charters for fintech companies. So this is a conversation. I'm not going to go into this document today on this video. However, this is from the Office of Comptroller of Currency back in 2016 right here. And this is about exploring special purpose national bank charters for fintech companies. Let's keep it moving. Now I want to take you back to the Economic Club of New York, where we're going to listen to a soundbite here from Brad Garlinghouse and what he says here about working with the banks. And shout out to Bank XRP for this information. So let's listen to this clip here. It is a couple minutes, a minute or so, about a minute. So let's listen to this. And actually, 1 second here. Let me make sure I don't mess the audio up. So let me make sure the audio is not going to be double audio and then sound horrible for you guys. Okay, here we go. So here it is right here.
I know sometimes this is proprietary information, but could you name some other customers that would give this audience a sense of how you guys have already put the infrastructure into place? It's servers, right? Is it cloud or what?
Okay. We actually primarily use technology behind the firewall, and that's really because that's where the banks are comfortable.
Right.
I think.
Did you hear what he just said? Let's listen to it again, actually, because it's that important.
And started working with Ripple, and it thus began that particular customer journey.
I know sometimes this is proprietary information, but could you name some other customers that would give this audience a sense of how you guys have already put the infrastructure into place? It's servers, right? Is it cloud or what?
Okay. We actually primarily use technology behind the firewall, and that's really because that's where the banks are comfortable. Right. I think over time, some of that will move to the cloud. But look, we work with.
There you go. He even says, I think over time, some of that moves to the cloud, like RippleNet, cloud-based service. It's pretty remarkable. So he's telling you and acknowledging that that Ripple and XRP is already behind the firewall of the banks. Well, what do banks work with? Currency. That's what banks work with. Currency. And that's why they're behind the firewall, the banks, in my estimation. Now, let's take a look at this document. Courtesy of Big Skinny, shout out to him. We have some really, really great conversations, and we just go in depth on the things that we talk about, and most of it is to do with regulatory framework and things of that nature that have to happen for the grand vision to even have an opportunity to take place. This is comments regarding the OCC proposal exploring special purpose national bank charters for fintech companies. Now, the gentleman, Dr. Douglas Jackson, is a founder of two companies, and I'm not going to go, I'm going to take, you can breathe a sigh of relief. I'm going to go over just a few excerpts throughout this document. This document is a absolute must-see, and I will post it in the comment section. But this Dr. Douglas Jackson actually started eGold back in the day and got in trouble much in the same manner that Ripple had found themselves in trouble with FinCEN, only it was even earlier, back in 1990s, right? Early 2000. And he actually had to go to court and was actually found guilty, although they didn't think he was doing anything nefarious, and they didn't sentence him to jail or anything. And even in the statement, they made it very clear that there was no malicious intent. There was just him operating in an area with innovation that wasn't properly regulated. And because of that, though, because a judgment was found against him, he wasn't able to obtain the proper licensure. Now, this is interesting because we know that FinCEN fined Ripple back in 2015 for operating without a money service license, right? Transmitter license. And this is interesting because there was no court case or judgment against Ripple, and that fine got them to correct what they were doing wrong and get in compliance as best they knew how to that day and to this day too. And because of that, I believe that has really been a saving grace for them. That letter that was issued by FinCEN that fined them, got them to get on the right path, also told them they could continue to sell XRP, a virtual currency, in their eyes as well. So from the CFPB, from Chris Giancarlo, from FinCEN, we're seeing virtual currency be the narrative here, right? Well, now we're talking about the OCC and this writings of Dr. Douglas Jackson as a recommendation of how to see these markets. Now, let me move quickly through some of this stuff because obviously it's a heavy read, and I'm going to grab just a couple spots here. So what elements should OCC consider in establishing liquidity requirements for an uninsured special purpose national bank that limits the type of assets it holds? And then it goes into the breakdown of that. Now, I'm not, like I said, I'm just going to skim coat some of this stuff. The point I wanted to get here was this section above here. Let me just read this. The ascription of legitimacy, however, is a two-edged sword and also constitutes dominant risk in the OCC proposal. An implied stamp of approval for ill-conceived schemes would potentially amplify harm of their dissemination and in turn damage the reputation, to some extent the perceived legitimacy of the OCC itself. I will address this in some detail below in comments regarding digital currencies. It is especially relevant in regard to unbacked digital currencies such as cryptocurrencies. They are ascribed value strictly on the basis of allegedly strong technical measure to limit the number of digital units created, a category that could well be described by term monopoly money, or more to the point, and avoiding the Hasbro trademark, play money. So let's keep moving. Let me move through to the next little spot I want to stop on. This entire document is remarkable, and I've been through the whole thing. Here we get to like Bitcoin, and they talk about Bitcoin heavily here. Listen to what is said about Bitcoin. The original premise of Bitcoin was the decentralized nature made it immune to possible government efforts to snuff it out. This has always been a fallacy in multiple respects. Reportedly, China is home to 90% of Bitcoin traders and 70% of mining. To enumerate just one potential imminent risk A major recent source of demand driving up the exchange rate of Bitcoin has been Chinese usage as a vehicle to circumvent currency controls implemented to impede capital flight and prop up the renminbi, where the decision made by the Chinese authorities to destroy it would not be a difficult task. Sophistication of the Great Firewall of China is such that Bitcoin-related packets could be selectively blocked, effectively isolating internal messages from the rest of the world and resulting in a de facto hard fork. Such an action could trigger a self-feeding cascade of panic sales. Additionally, with the well-documented concentration of mining power in China, arbitrary actions taken against a few of all high-profile Chinese mining operations would lead to immediate suspension of mining activity throughout the country. Currently, most institutions that hold unbacked cryptocurrencies on account do so in order to facilitate timely execution and fulfillment of exchange orders. They more or less hold balances in escrow, a pre-funding of exchanges. Clever technical processes such as multi-sig protocols may aid in securing the cryptocurrency assets. What is often overlooked, however, is that these providers are also pre-funded sums of conventional money on account. What capital and liquidity requirements should be applied with respect to those assets? I propose that the question of how to regulate an exchange service is straightforward. If the provider of exchange services is an existing bank, it already has an applicable set of rules. If it is not a bank, it should be classified as a money service business providing currency exchange services. As such, it is subject to state regulation governing permissible investments. If it is a newly organized fintech company, but its function properly abstract is limited to provision of currency exchange services, it does not need a new category. So basically here they're addressing the issue that, for one, they see a huge problem with Bitcoin. That's number one. Huge problem with Bitcoin. Number two, then they're addressing the issue of whether something is an exchange and that it should be operating at the level of a bank or a fintech company in regards. So, okay, let's keep this moving. Again, this entire document is remarkable. Look at the questions that are here, and I'm not going to go through this whole thing. Should the OCC seek financial inclusion commitment from an uninsured special purpose national bank that would not engage in lending, and if so, how could such a bank demonstrate a commitment to financial inclusion? How could a special purpose national bank that is not engaged in providing banking services to the public support financial inclusion? I mean, you can see the depth that they're going through this. Let me just read this one part here. A digital currency system such as one I have developed advances financial inclusion by providing access to an efficient, low-cost remote payment system. Credit plays no role. No poor credit rating or lack of established credit is not a bar to entry. The system I have developed also has no overdraft fees. Financial inclusion may also be fostered at the international level with remittances. The advantages of third world countries that receive remittances are extraordinary. Today, a significant portion of these remittances are processed through informal systems at variable cost. And I want to remind everybody here that who has been out here working in these third world countries where remittances are really devastating to the people that have to use them to participate in the global system, whether it's just for remittance to a family member or not, and it's Ripple, right? And Mojo Loop and all of these other things they've been doing. All right, let me keep this going because it's a lot more. I should really read these whole pages, but I'm not, for just the expediency of getting this document out here, and then we can all discuss this in further conversation. So, okay, it talks about the advantages of lowering the increased flow of normally an 8% transaction fee, sometimes 5%, down to a 1% fee. What is discussed? Listen to this. To summarize, traditional remittance model, actual transfers of value sandwiched between two obligatory exchanges. Recipient receives entire sum in local currency. Digital currency system with a AUG as example, with gold as an example. Unbundles actual transfer from the exchanges. Exchange may not be required for sender or recipient. Recipient has multiple options. Instead of receiving entire transferred amount in local currency, recipient may hold some, all the value received as a gold balance, divvying it out as needed over time, transfer portions of the gold balance to other recipients when they have a full range of options, spend directly to local merchants that accept AUG, and deposit local bank offerings AUG denominated deposit facilities. So this gentleman, because of his background in building a gold system in the early days of the internet here, is suggesting a gold-backed system here. Now, I find this interesting because this really brings us to the question of Judy Shelton. And if she gets voted in through the full floor vote of the Senate, we understand that Judy Shelton is also wanting to do things in a back to the future cryptocurrency way when it comes to a gold bond introduced to back the major currencies of the world. This is falling quite well in line with some of what this gentleman is saying, Dr. Douglas Jackson here. So, okay, now let's move forward. I want to move to, and we could do this whole page too, but I'm not going to. Okay, let me get to, you know what, let's go ahead and get to this because it gets pretty heavy here. So let me go through here. Oh, I want to read this. Would FinTech Special Purpose National Bank have any competitive advantages over full-service banks by the OCC should address? Are there risks to full-service banks from fintech companies that do not have bank charters? A digital currency organized in accordance with the principles laid out in the pending patent system and methods for a private sector monetary authority filed back in 2013, August 28th, enables a better demarcation between money and credit, laying the groundwork for eventual market-based, non-coercive resolution of the internal contradictions that have destabilized banking for hundreds of years. Now, in that, I mean, I think we understand the macro that we are moving from a debt-based system, generally speaking, to eventually an asset-backed system. Now, that's not going to happen overnight, and it's a slow roll, but this is where we're going. This is where we're going. All right, so now let's get into this, because they literally just tore Bitcoin through this document down. I mean, literally, they have. It's a problem for them. And let's see. Most salient concerns with digital currencies are risk associated with unbacked cryptocurrencies. These problems fall into three categories: potential collapse of market value, anonymity, and the inability to meaningfully impede criminal activity, lack of responsible central authority for addressing customer issues or responding to service of process. Okay. Advocates of unbanked cryptocurrencies refer to national currencies as fiat currencies, a somewhat pejorative term to highlight their discretionary nature. Playing to the popular oversimplification depicts government-issued money as conjured out of thin air. Bitcoin was the first digital cash to attract widespread attention, is cast as non-discretionary due to the protocol which by new money supply is created on a fixed schedule by means of mining activity. This is characterized as a safeguard to prevent inflation, implying that inflation means expansion of a money supply, excess of whatever would be proper rate of expansion, underlying premise that scarcity of a medium combined with significant cost to produce additional quantities of that medium constitutes an adequate basis of value. The lack of centralized control, particularly the lack of responsible issuer, any issuer at all, is regarded as a feature. The basis of Bitcoin's claimed ability to withstand possible government attacks intended to suppress it. The metric that attracts the most attention is the widely viewed as validation of Bitcoin's monetary logic. It is the exchange rate relative to other currencies. The exchange rate is entirely a function of demand for Bitcoin, a significant component of which stems from speculative trading by participants. Well, now let's talk about this, because guess what they talk about now? I'm reading this to you because they're about to talk about XRP in the OCC document right here. Seeking capital gains, the appeal of Bitcoin as a speculative trade or vehicle is enhanced by the lack of any general mechanism for detection and unreported gains, such as central counterparty obliged to file the IRS 1099 form. It is likely that the trading experience of vast bulk of speculators does not predate the aberrant conditions that have prevailed for the past decade, during which time buying the dip has been the key to profitable trading for every class of tradable security. In contrast, XRP, the native currency of Ripple, is effectively a fiat currency. Boom. That just happened. At its inception, Ripple Labs created 100 billion units of XRP, 20 billion of which were retained by creators who were also the founders of Ripple Labs. The creators gave the remaining 80% of the total of Ripple Labs, with the XRP intended to fund operations. The monetary policy of Ripple Labs has been stated as: we will engage in distribution strategies that we expect will result in a stable or strengthening XRP exchange rate against other currencies. In other words, only the forbearance of the people sitting on the vast pool of play money prevents the release that would kill the golden goose. Unlike government-issued fiat money, no entity has the ability or responsibility to buy in XRP in sufficient quantity to quell a full-on panic situation. The best that can be done is to slow or halt further release of additional money. Boom! Let me tell you something. What he just described there is what we know as monetary policy, because he sees it effectively as a fiat currency. And no, that does not mean that XRP will be worth $1. No, no, no. Not by a long shot. Ladies and gentlemen, what we don't know as of yet is how this plays into XRP being seen by the OCC, or certainly by Dr. Douglas Jackson in this document, as a currency, is how this plays into the notion of a gold-backed system. One thing is for sure, we all understand that XRP back end settles the issue. That's the deal. Brad Garlinghouse said it even in the economic club back in 2019. He doesn't see a need for digital currencies, cryptocurrencies, to solve a retail problem. This is about back end. And if the OCC is now seeing Ripple as effectively a fiat currency that could derive its own value by either halting further release of additional money or releasing more, however it needs to happen, that starts to take shape of actual monetary policy. This is remarkable, understanding that there has been a lot of XRP that has been pre-allocated through the accelerator program back in 2017. 300 million XRP were pre-allocated to accelerate different areas of industry throughout the world. Only the forbearance of the people sitting on this vast pool of play money prevents the release that would kill the golden goose. And we understand that Brad Garlinghouse has said to Julia Chatterley that whoever is contractually agreed to pre-allocate any XRP to is under contractual agreement. And that is about the responsibility of getting this asset, which is money, which is currency, more importantly, throughout the world, in my eyes. I have to say, I think we are getting very, very close now to very, very real different things happening from the right places and the right agencies of the world. This is extremely exciting, and it falls in line with every other thing that we've taken a look at up until this date. This is Dr. Douglas Jackson's opinion that he is writing here in a supervisory examination of the markets and how to handle non-traditional bank charters for fintechs. You know, one of the things I can't help but think of is the escrow, right? You can't help but think of the Ripple escrow. And escrow, by definition, means that a third party is holding it. Could we be looking at the early opinion that leads the OCC to a decision that either has Ripple eventually become a bank, or PolySign, which I believe is obviously a bank, and may PolySign become the governance and the comptroller, if not already, of the escrow from Ripple. I don't know. I'm speculating out loud here, but I'll tell you this. This is pretty remarkable information. So let's get this out. I'm going to get this document in the comment section for everybody to take a look at. And let's have a conversation. Let's have a great conversation about this material, because I think we're closer now than ever before to really the entire market changing in a way that we've always wanted it to. All right, guys, that's going to do it for me. Make sure you hit the like and subscribe. I'll catch you on the next one, and share with somebody you know.